Hello, and welcome to the August Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. July was generally a good month for financial markets, although the resurgence of the pandemic did leave some markets behind. Here in the U.S., all three major indices were up by over 1%, with the S&P 500 leading, and developed markets also did well. Emerging markets, however, were hit hard and ended the month down significantly. With medical risks rising, bonds also did well last month for the fourth month in a row as interest rates dropped. What drove these results was the continuing strength of the economy, but offset by the rise of the Delta variant of COVID. Because although we ended June with the virus looking like it was under control, July saw a sharp reversal as case growth rose by almost 5 times, even as positive test results more than tripled. With the Delta variant ripping through the unvaccinated population, hospitalization rates, which are usually a lagging indicator, have also increased back to levels last seen in late February. The medical risks have clearly returned, making it clear that the existing level of vaccinations remains insufficient in many areas. But while the medical risks are up sharply, the economic risks look to remain contained as most of the new case growth is focused in a handful of states. Shutdowns remain unnecessary in most of the country and unlikely in many of the most affected areas, and absent such shutdowns, it looks like the economy will remain open and be able to keep growing. Despite that, though, there are signs that the rising medical risks are slowing that growth. Layoffs have stopped going down and may be showing signs of an increase. Business confidence, while still strong, has ticked down, as has one major survey of consumer confidence. The economic data, while still positive, has in many cases underperformed expectations after months of substantial outperformance. So the easy part of the recovery, both medical and economic, now looks like it may be behind us. But nonetheless, the recovery does look likely to continue. While infection growth is much too high, it's caused vaccination rates to trend up, which will help. While many areas are severely affected by the virus, many more are not. And while confidence and growth are pulling back, they're still at very healthy levels. On the economic side, there's still substantial momentum. And on the medical side, as we've seen in previous waves, we know what to do and will eventually do it. In fact, there are signs that may be happening right now. So the key question going forward is whether this wave of infections will break out beyond a handful of states. So far, it doesn't look like it, but that's what we need to watch. On the economic side, we need to watch whether the decline in confidence and momentum gets worse. Risks are higher than they were a month ago, that's true. But as we enter the second half of the year, the bottom line is that despite the outbreaks of the virus in some areas, at the national level, conditions still remain more favorable than they were a couple of months ago. While we are seeing increasing risks and pullbacks in some of the data, in most respects, conditions remain favorable, and they're likely to keep getting better. And this is exactly what markets are seeing as well. Growth, but slower. Rising medical risks, but risks that'll be contained. This is a slowdown in the recovery, but likely only a slowdown, and we could still see continued improvement through the rest of the summer. And that's what markets continue to expect. That's it for this update. Thanks for watching. Join me in September for the next one, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.